I want to set up my company in free zone to get 0% corporate tax. Is it wrong? No. Who should set it up in mainland? Who should set it up in free zone? There are certain businesses which require to be set up only in mainland. If you are going to sell to the consumer in UAE, that means you need to have your company in the mainland. In mainland, there is no such restriction that you need to sell only to consumer or B2B or B2C. Nothing. But when it comes to free zone, it is need to be very careful. That sometimes free zones you feel like it's very easy to set up. It is comparing to mainland, it is cheaper. But later, in order to avoid the complication, the violation of Ministry of Economy rules, it's always need to analyze who is your targeted audience.
Hello everyone, welcome to another podcast of Flyingcolour. Today we are going to discuss about the setting up of trading industry in UAE. Myself Monisha, a qualified ACCA, and I'm sitting with our CEO of Flyingcolour and who is also the tax agent of FTA. Welcome Firoz sir.
Thank you so much Monisha, thank you for having me here.
What do you think UAE remains the top choice of setting up the trading industry compared to other countries?
There are multiple reasons for that. Example, if I'm telling the infrastructure which UAE is having, the access of the port, Jebel Ali port in Dubai, and the ports which are there all over the other Emirates as well, and the biggest airport in the world, which is again which is under construction, which is Maktoum International Airport. So there is one set of reason which is more into the infrastructure level, and another set of reason I'll say like it is more on the benefits, which are taxation benefits. So when someone is setting up a business in UAE, which is especially into the trading, there are certain tax benefits and incentives, and also there are certain benefits in terms of import duties. That is also a benefit. This is about the benefits in terms of taxation. Now moving to the next benefit, if you are discussing, it will be, I'll say like the Emirate dirhams, which is AED, which has a fixed rate with USD. That one US dollar will be always 3.6725 dirhams. So there is no foreign exchange losses for international business. And the next reason I can say like a political reason. There is no political instability in the country.
Yes, sir. Yes.
The ruling family, taking care of the country in a very good manner. And unlike other countries, there is no such elections or the instability of government is not there. This all things making the investors who are into the trading business keeping Dubai or in UAE as general as their primary place for setting up their business.
So when it comes to tax, so what are the benefits that we are having?
There are multiple benefits. When it comes to taxation, first of all, taxes itself are different.
Yes, sir.
Direct taxes and indirect taxes can be there. Talking about indirect taxes, which is VAT and excise tax. VAT, UAE has 5% VAT. That is also for the goods which are consumed within UAE. As UAE as a global hub, many investors or entrepreneurs are using UAE as a hub. Means they are not intending to bring the products for the consumption in UAE, whereas they buy from some countries, example China, and bring the goods to the UAE, keep it in the bonded warehouses in UAE, and export after doing repacking, all these things, and export. This is one set of business. Another set of business, they have their establishment in UAE, but the goods are never coming to UAE. In these cases, goods are going there are multiple terminologies used like high sea sales, build to ship to model. This is very common and very famous in UAE. In this both situation, there is no VAT applicability because the goods are not going to consume in UAE. So this is about VAT. Now, if the goods are importing from outside UAE to UAE for consumption purpose, then in that case also, if you see the VAT rate in UAE is only 5%. And it's not complicated like many countries are having different GST rates.
Yes, sir.
It's only 5%.
And it's easy for others to remember
understand the things.
Yes.
Same applicable when it comes to the customs duty also. Customs duty is most of the goods are 5%. And again, the customs duty will be applicable only if the goods are releasing from the customs for consumption purpose.
Okay.
So the same, what I explained to you on VAT, the similar mechanism works for customs as well. Now, this is about the VAT and customs. Excise tax, yes, UAE has excise tax, but it is applicable only for few products,
Okay.
which are generally classified as harmful for the human being and nature. If I give example to you, tobacco products, energy drinks, and then some sweetened drinks. These few products are only subject to the excise tax, not other products. So this all makes UAE a competitive country in terms of indirect taxation.
You know that we are having another benefit of setting up the business in free zone. So do they really, the trading companies are getting 0% tax, or what about the implications of corporate tax? The people are thinking like setting up the business in free zone, they can enjoy the benefit of zero tax. So what do you think about?
It's a very common misconception. You must be knowing, like, the corporate tax started with effect from 1st June 2023.
Yes.
Practically, it got applicable for companies with effect from 1st January 2024. Sitting in 2026, I can say it's been almost first year corporate tax filing is completed, and second year corporate tax filing is going on. Still, we get this question: I want to set up my company in free zone to get 0% corporate tax. Is it wrong? No. They may be eligible, but it is tied with a lot of terms and conditions. I'll get into that. But before that, you asked about a question: mainland and free zone. This is interesting. So, who should set it up in mainland? Who should set it up in free zone? One benefit is taxation. Apart from the taxation benefit, there are certain businesses which require to be set up only in mainland. When
Okay.
it comes to, I'm talking only from the trading perspective. I'm not getting into the any of the other service industries. So when it comes to the trading business, to whom you are going to sell? If you are going to sell to the consumer in UAE, that means you need to have your company in the mainland. Whereas you are going to bring the products export purpose, or let's say you are going to bring the products to UAE and then selling to, basically you are acting as a distributor.
Okay.
Means your customers are not the consumers.
Okay.
In that case, you can set it up in both free zone and mainland.
Okay.
So in short, in mainland there is no such restriction that you need to sell only to a consumer or a B2B or B2C, nothing. But when it comes to free zone, it is need to be very careful that, sometimes free zones, you feel like it's very easy to set up. It is comparing to mainland, it is cheaper, but later, in order to avoid the complication, the violation of Ministry of Economy rules, it's always need to analyze who is your targeted audience.
Okay.
Then yes, if your business activity is fitting into the free zone definition or what is permitted in the free zone, yes, possible. I also always support to have free zone. One another point always need to consider with whom you are going to work. Why does it matter? Because if let's say you are setting up a business and you are going to supply the goods to the government authorities,
Okay.
or let's say you are working with some government organization, or it can be anything. If you want to get the do the business with governments generally prefer to work with mainland.
Okay.
Even if let's say maybe you are dealing with government as a B2B, but after setting up, you are understanding that the government does not want to deal with free zone. So all these things, it is easy to set up something, but a proper analysis is required. So this is about mainland and free zone.
So the people who are setting up the business in free zone, they are thinking like we'll be having a 0% tax on everything. They can enjoy like with the 0% tax, and but it is not the case, right? It will be differ from business to business, definitely. And what about that corporate tax implication? So,
Yes, corporate tax. I'll just give you a general context of how the corporate tax thing is. Corporate tax rate is 9%, which is applicable on the company's profit. Now, regardless you are setting up in free zone or mainland, you have to register your company for corporate tax.
Yes.
This is the primary thing.
yes.
You pay tax or not, it's a different thing.
Yes.
But registration is mandatory. When a company should register? Within 3 months. This is one more misconception I have already seen, because business owners or some people are getting confused between VAT and corporate tax. In VAT, there is a threshold. you start your business, you do certain amount of volume of business, then you register either voluntarily or mandatorily. That's not the case in corporate tax. Corporate tax, once your business is set up, you have to register and get the tax number within 3 months,
Okay.
regardless. I heard this, like, my bank account is not open, my visa is not issued. Nonetheless, you have to get the corporate tax number within 3 months. Otherwise, there will be a penalty of 10,000 dirhams. This is the first thing. Second thing, once you set up your company in free zone and you have the corporate tax number, everything in place, you will be required to file the corporate tax return. And corporate tax return in UAE, it is annual basis. Once the financial year finished, we need to submit the corporate tax return within 9 months. That is the timeline. The UAE government has given enough time. I have seen some countries are having advance tax they need to pay, or they need to file the tax return within 6 months, 5 months. So UAE told that you take good 9 months to finalize your books and file the tax return. So there is 9 months. While filing, you need to determine that whether your business is eligible for the 0% corporate tax or not.
Okay.
And as I told you, it's not straightforward.
Yes.
And I know for a reason, like, I should tell these things to you. People come with asking the same question with ChatGPT. So ChatGPT still have one information which is very outdated. I'll give you the history also. The corporate tax law was published on 9th December 2022. So before publishing the corporate tax law, the UAE government issued a document called public consultation document.
Okay.
Which is a very obvious thing in UAE, that any new law published, they issue a public consultation document.
Okay.
Why they are issuing the public consultation document? They want to get the opinion from the public.
Okay.
So in the public consultation document, it is written that any free zone company who get income from outside free zone will be eligible for 0% tax.
Okay.
Any free zone company who is getting income within UAE, it will be subject to 9% tax.
Okay.
Now, this is from the public consultation document. Considering all the public opinion, the law got published on 9th December 2022. This particular rule, what I explained to you, is not there in the tax law. Tax law came up with altogether a different view on the free zone. Now, the funny part is that I believe ChatGPT still knows this particular thing, what I told, that within UAE it is 9% and outside UAE 0%. So when I meet people, when I meet clients, obviously they do research, right? Like when someone wants to set up a business in UAE, they do research.
Yes.
When they ask, like, okay, if I want to get a 0% corporate tax, where should I set up? Obviously, the ChatGPT has the answer. Set it up in free zone. And as long as you are not doing business within UAE, you get 0% tax. So that is absolutely wrong. Now, free zone, how to get 0% corporate tax? It is again subject to condition. Since our today's topic is only into the trading, let's stick with that, because otherwise whoever is listening us will get confused there, like, because it's not easy to explain in 5 minutes the conditions and all these things. I will try to make it very simple, and I will focus only on the trading business part. So you can bring back to me to the point if I'm deviating from the main topic.
Yes, sir.
The first condition is that company should be in free zone. Now, in free zone itself, there are almost 50 free zones in UAE, entire UAE, if you see. Out of these 50 free zones, almost 20 free zones are within the control of the UAE customs.
Okay.
Means any movement of goods or people will be under the customs control. Different countries are having different names. Some are calling it as customs area, bonded area. In UAE, it's called designated zone.
Okay.
Designated zone, most of the designated zone are coming within free zone. So how does it work? I'll give an example to you. There is a free zone called Jebel Ali free zone, Jabza. Is it a free zone? Yes. In Jebel Ali free zone, there are multiple gates to enter. So few gates, it's always, if you go to that gate, I forgot, I think gate number 4 or 5. If you are driving and going, they will inspect your car. When you
Okay.
come out, they will inspect your vehicle because the movement within that zone will be under the customs control. And anything moving within that zone, there is no customs duty, there is no excise tax, there is no VAT. So obviously, when people drive inside and take out something without notifying the customs, it's called smuggling.
Okay.
But yeah, I'm just giving you the idea. So there are certain zones called designated zones. Now, for a trading business, in order to get a 0% corporate tax, we need to make sure that the license is set up in designated zones. So out of 50 free zones, there are free zones, I'll tell you, like in Dubai, Mainland free zone, or like International Free Zone Authority. These are not designated zones. Even DMCC, Dubai Multi Commodity Center, it's not a designated zone. So in case if you're looking for a 0% corporate tax, make sure your business you are setting up in a designated zone. Now here it's more crucial. Someone thinking like, okay, I set up my company in Jabza. Is entire Jabza is designated zone?
No.
As I told you, there are certain gates.
Okay.
There are certain other gates. You can walk, you can drive and go. No one will stop you. You can come back. No one will stop you. So the business should be set up, or your presence should be within the customs control area, which is called designated zone.
Okay.
So that is a primary condition. Second condition, like let's say someone is setting up a company. There is no presence in free zone. We can call it shell companies.
Okay.
The UAE government
Okay.
told, we are not intending to give the benefits to a shell company. They call it substance. Substance is a collective terminology. Like it's not a single thing. Like okay, what does that mean? Substance. I'll explain to you. The tax law is explaining that the free zone company need to have adequate employees. Now, can the employee be part-time or full-time? It is clarified. It should be full-time
Full-time.
employees.
Okay.
Second thing, adequate employees must be qualified employees.
Okay.
What is the qualification? What business you are doing? To take care of that business, you need the qualified employees.
Okay.
I'll give an example to you. Let's say I'm into gold trading. I have 5 employees. All 5 employees are my accountants. Are they qualified? Yes. Are they full-time employees? Yes. But is the accountants are running the business?
No.
So for your business, what qualification they need? That is what the employees you need to put into your business.
Okay.
So that is employees. Adequate operating expenditure. Operating expenditure means you may have office, you may have like the utilities, salary. It can be any sort of business operating expenditure.
Yes.
Then told adequate capital expenditure. Capital expenditure means to run the business, maybe you need to have furniture, fixtures, computers, or it can be anything. Maybe you have warehouse, whatever it is there. You need to have some sort of capital expenditure.
Do we have any minimum capital of like setting up the business in?
The expenditure part? Okay, I'll come to that. It's a very interesting question. Okay, and the final one they told, the business, the core income generating activity. Now the core income generating activity also can change, depends on business, right?
Okay.
Example I'm telling, what can be a core income generating activity of a trading? It can be sales, negotiation, talking to the vendors, suppliers, arranging the shipment. These are the core income generating activity. Whereas if it is a consultancy service, their core income generating activity can be different.
Different. Yes,
So
sir.
whatever your business core income generating activity, that should be conducted inside the free zone. These 4 things they collectively call substance. Employees, operating expenditure, capital expenditure, and income activity in free zone. Now the question you ask, how many employees, correct? How much we need to spend? Trust me, I have no idea. Why I have no idea? Because the tax law is explaining that adequate. Now when we are telling adequate, I mean clients ask me, 1 employee is okay? I don't know. 2 employees are okay? I don't know. See the adequate in the sense like, I'll tell you like what is the meaning of adequate. The burden of proof is on the taxpayer. You explain to us how many employees are required. I'll give an example to you. Let's say there is a trading company in free zone. They are handling 1 shipment in a year.
Okay.
And their turnover is let's say 100 million. Do they need 100 employees to handle one shipment? Maybe, may not
Maybe,
be.
yeah.
How I will advise how many numbers you require. Maybe they need one employee because one shipment they are doing in a year. They don't need many employees. Some business require many employees to run the business. But this is depends. Like should what number of employees. Now operating expenditure. What is the adequate operating expenditure that you need to have? What is the adequate capital expenditure that you need to have? Maybe capital expenditure is zero. That doesn't mean they don't have substance because for them that much only is adequate.
Okay.
So there is no fixed numbers. That's what I'm trying to
Yes,
say.
sir. I got it.
That is called the substance part. Now comes the third condition, which is simple actually. That the business who want to get a 0% corporate tax, they need to submit the audited financial statement. Like management accounts or whatever the P&L, profit and loss balance sheet, it should be audited. When it comes to the normal companies who are paying 9% corporate tax, for them audited financial statement is mandatory only if the turnover is more than 50 million crores.
Okay.
So if a mainland company whose turnover is 40 million, for corporate tax purpose it's not mandatory to submit the
Audited financials.
But the same company is in free zone and they want to get a 0% corporate tax. Regardless of their turnover, they need to
Get
submit the
audited.
audited finances.
Okay. Okay.
And the next condition is that the business should maintain the transfer pricing regulations. Transfer pricing regulation, again, it's a very wide topic. If we get into transfer pricing, it will be this particular podcast itself will be longer. I'll simply tell you, UAE is giving 0% tax for free zone. When that people can use it as a tool to move their profit from high tax country to low tax country. Example, the client or the owner has a business in UAE also. The
Okay.
owner has a business in Australia also.
Okay.
So in Australia maybe the tax is 30% or 40%. I'm not sure about it. So the owner is thinking that okay, let me set up a free zone company. I will buy from my own Australian company and I will book my maximum profit in Dubai and get a 0% corporate tax. So the authority told like you can deal with your related company. We have no objection for that, but you need to make sure that you are dealing at a market value.
Arm's length.
Arm's length, yes, exactly.
Yes.
That's the technical term I was thinking. I was missing that part. So that arm's length need to be maintained and it need to be documented also. It's not that we can just tell orally like, okay, we are maintaining arm's length. It need to be documented. This is the next condition which need to be managed by the business. Second last condition actually is that it's called, the technical term they used in the tax law is called de minimis threshold. De minimis threshold means, okay, you are doing trading business, you are satisfying all the conditions, so you are getting a 0% corporate tax. Your trading business is getting 0% corporate tax. That doesn't mean if you do something else, you will get 0% corporate tax. I'll give an example to you. Let's say you have a trading company.
Okay.
You are doing buying, selling, trading, all this you are doing. Suddenly you got a lead where you need to act as a broker.
Okay.
So your income now will come from brokerage. Brokerage income, if you are getting from outside UAE, it's not eligible for 0% corporate tax. You need to have a clear view on like what sort of income you are getting. Are you getting the income only from the source which is eligible for 0%, or are you getting income from another source which is not eligible for 0%?
Okay.
Now, what is this particular condition de minimis is explaining that? Can you get such income? The tax law is telling that yes, you can get, but to an extent. So you can consider it as a spoiler. So they are telling like, okay, if you are getting little bit of this sort of income, then they give a threshold also for that. The threshold they capped at 5% of your total revenue in a year,
Okay.
or 5 million, whichever is lower. Means you should not cross both of them. Maybe I'll give an example to you. If there is a company, that company's overall turnover from trading is 200 million.
Okay.
They got, let's assume 8 million from trading business, a commission business as a brokerage. Now if you calculate, a percentage. Total turnover is 200,
200.
and the income from commission is 8 million.
8
It is
million.
only 4%. But it is more than 5 million. They're telling no. So it should not be more than 5% also. It should not be more than 5 million also. If the revenue is below that, below the threshold, then that revenue also will be considered as 0% corporate tax.
Okay.
But the danger, the moment you exceed this threshold, you are not going to pay tax only for that, the non-eligible income. Your free zone itself losing the benefit of 0% tax. Think of the impact or the eye of business owner should have when the income is getting mixed. One small mistake can spoil their 0% corporate tax eligibility at all.
Okay.
And the most dangerous part, once you lose it, you are losing it for 5 years. So that is another danger thing. It's not only that this year you are losing and next year you can again get. No. They told if you break any of the condition, then you are losing it basically for
Next 5 years.
5 years. So you need to be very careful. And as I told you in the initial statement itself, anything you can set up. It's not a big thing. But are you setting it up properly? Maybe you will have a lot of expectation. Okay, I'll do like this. I have X amount of turnover, I have X amount of profit, and I want to get the 0% tax benefit. But one small mistake can spoil everything. And trust me, I have seen it. I have seen it many cases where some are lack of knowledge, or some people are not guided properly. Some business owners were overconfident, thinking like, okay, I know these things, it is very simple. Of course, it's not like the UAE tax law is rocket science. Anyone can learn it. But and the tax law also keep changing, right?
Yes.
Like in any other country, tax law keep changing. So these are the main conditions. Now these conditions are common for all the activities.
Okay.
Now, one thing specifically when you are into trading business, you need to be very careful that are you trading or are you a distributor?
Okay.
Okay. Now, when it comes to trading, what is the meaning of trading? You are selling,
Buying and selling.
buying and selling, and you are selling to the consumer. Basically,
Yes,
that is
yes.
the meaning of trading. Distribution means you are not selling to the consumer; you are a distributor. So you will be selling to the retailers. Now it depends on what product you are dealing.
Okay.
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 You can give me a couple of products example, then that will help me also to explain to you.
For example, metals.
Metals. Okay. So when it comes to metal, I'll say okay, you can deal it in two ways. Are you selling, your consumers are your buyers are consumers or your buyers are retailers? If your buyers are consumers,
Okay.
then there is an activity which is eligible for 0%. It's called trading of qualifying commodity. Now this particular metal, what you told, we need to see that whether the metal will fit into the definition of commodity or qualifying commodity. If you see the definition, what they have given for commodity is that it can be metal, mineral, energy product or agricultural product. So these are the four things which first of all come under the definition of commodity: metal, mineral, agricultural products and energy products. Now metal, which you told, yes, metal is there. So can I conclude that yes, my product is eligible? No. Further, we need to check that what is the form of the product. Is it in a raw form or it is in a processed form? If it is in a processed form, not eligible. If it is in a raw form, eligible. Is that the end? No. Again, we need to check, is the product, the metal, has any recognized stock exchange? For example, gold. Gold is also metal.
Yes.
Silver is also metal. So gold has a stock exchange, right? So we need to see this particular product has the stock exchange.
Okay.
It doesn't mean that you need to sell through stock exchange. Okay, that is also some people are misunderstood that way. But the product should have a stock exchange market. That's the
Okay,
main. That's
okay,
one thing.
okay.
Second thing, the authority has published a list of pricing agencies. There is a ministerial decision. It was published in the year 2025. Ministerial decision number 230 of 2025.
Okay.
So the authority has given a list of pricing agency. If this pricing agency also listed the product price in their agency, that is also fine. So it should be first of all metal. It should be in raw form. Then it should be for exchange, or they need to have the pricing agency listing.
Okay.
If these three things are satisfied, you set up the company in any free zone. Doesn't matter it's in a designated zone or normal free zone. That's very important.
Okay.
Versus you are telling, you told metal, but you are telling like, okay, my metal, what you are telling is not in raw form, then what? And you are selling to the end consumer, then what will happen? You will not be eligible for 0% corporate tax.
Okay.
This is one thing. Next thing, let's take another example. Someone who is into foodstuff trading. Foodstuff trading is not fitting into, maybe it will fit into agricultural products, but I don't think foodstuff means it's already processed.
Yes, it's already.
So in that case, we need to see to whom you are selling. Are you selling to the consumer? That means you will not be eligible for 0%. If you are acting as a distributor, then again you need to satisfy the condition of substance, audit, transfer pricing, de minimis, everything. But on top of that, if you set up your company in a designated zone, then you can be eligible for 0% corporate tax. I know it's a bit confusing. So let me make it very clear.
Okay.
You see who is your customer. He is a retailer or a consumer.
Consumer. Okay.
If your customer is a retailer, I generally recommend go set up in designated zone. Don't see like what product you are doing. Now if your buyer is a consumer,
Okay.
then I will see which product you are dealing. I will see whether that product will fit into the definition of commodity, which I explained to you.
Okay.
If that is not fitting and the customer is consumer, I'll say be happy, pay 9%, make your life easy. So there are, I don't know whether maybe I missed some other part also, which may be important. Why I'm explaining this much detail is that there are a lot of things, and the implication or the impact if we miss any one of the point could be very higher. Like it could be monetary, can be very
A
big
massive penalty also, right?
penalty. I'll say we were thinking that I was eligible for 2024 or 2025 0% corporate tax, and we filed the corporate tax return claiming 0% corporate tax. Do you think the authority will come and object when you are filing?
No, they will come after 5 years.
It's not.
They will come.
It's not about 5 years actually. It's about the audit.
Yes.
So see, tax is a self-declaration. You declare anything, prima facie, they are going to accept it.
Okay.
But when they come for an audit, then they are going to check whether you have satisfied this 1, 2, 3, 4 conditions and everything. So that's how it works.
Okay.
Now, this is very a very common thing I always hear, is that I file my corporate tax return, I claim 0% tax, but FTA didn't tell anything to me.
Okay.
FTA will not tell anything. But when they come for audit, they are going to penalize retrospectively. They're not going to tell like, okay, you made a mistake, right? It's okay, going forward you do things properly. None of the, it's not about only FTA. None of the tax laws are like that. They're going to tell that, okay, this impact has retrospective impact and go and correct it. So, anything you do, they will accept, question later.
So, if a trader want to set up the business in UAE, so what are the 5 things that you are suggesting that the trader should keep in mind when it comes to the tax? Like the first 5 things, for example, when you're meeting up the threshold of VAT, you should be do the VAT registration like that. So, what are the 5 things that the trader should keep in mind when you're starting their business?
Rather than 5 things, let me put it across in a different way.
Okay.
5 compliances or 5 top
Yes.
5 compliances we can
Yes.
say.
Yes.
One, I'll take what you told, VAT. Understand your VAT applicability. Sometimes VAT is applicable, sometimes VAT is not applicable. So need to determine a VAT analysis. Once I set up my business, how VAT authority is going to see or VAT law is seeing my business model. Need to be very taken care of. There are some businesses who are importing. When they are importing, goods come to the customs. Then when clearing the goods from customs to the local market, they need to pay 5% VAT. There is another way, like they can take an import-export code in the name of company, and they can link their import-export code with their VAT account, so that when they clear the goods, they will need to pay this 5%. So it's called technically reverse charge mechanism for the VAT purpose. Now the VAT analysis is mandatory. Are you falling into, I'll say like, okay, what is 0% VAT? Most of you will tell that when you export it is 0%. Not always. 99% purity gold is 0%.
Okay.
When you are selling within the country, there is a certain products, electronic goods, hydrocarbons. This comes under the different treatment called domestic RCM.
Okay.
So, like that in trading itself, VAT need to have a proper analysis. This is the first compliance I would say. Second compliance, you need to make up your mind. You want to pay 0%. You want to get the 0% tax eligibility, or you are paying 9%. If you are paying 9%, then things are pretty clear. Like, I mean, what all so far we discussed in last 15-20 minutes, we can forget.
Okay.
Not everything always, okay, because transfer pricing things will still come into the picture.
Yes.
But all other things, generally the substance, all these things are not generally asked for the corporate tax purpose. But if the business is eligible for 0% or you are looking to claim it, then you need to have a detailed corporate tax impact assessment for your business, whether it is eligible or not.
Okay.
This is the second consideration you need to take into consideration. Third thing, e-invoicing. UAE is migrating from paper invoicing to the e-invoicing. We have already done a detailed podcast on e-invoicing, and we will put it in the I button and in the description, the link. Okay. Whoever is interested can go and watch, but I'll make it in a one minute explanation. UAE is moving from paper invoice to e-invoice. Whatever the invoice businesses are making, real time it will be getting reflected to the tax authority. Right now the tax authority has no real time view on what is happening in the business. So that is going to change. Now that also, there is a classification. Are you into B2B? Then you have to comply with the e-invoicing requirement. You have to process your invoice through the e-invoicing platform. B2C transactions are currently exempted from doing this thing. So who is your customer? Now again, you can have a question like, my customers are outside UAE. Why should I do
e-invoicing?
Correct. Only one thing you need to determine is your customers are consumers or business.
Okay.
If it's a B2B transaction, regardless location of your customer,
then e-invoicing is must.
The mechanism is complicated, as I told. If you watch that previous video, you will get an idea. So e-invoicing is something you need to take it into consideration. Fourth thing, I'll say customs. Customs, when it comes, it's always like some businesses are import and export. So when they are importing, they are doing some repacking and exporting. Maybe if they clear the goods, let's say they set up in mainland.
Okay.
They have their warehouse in mainland. Then they need to clear the goods and bring, right?
Okay. Yes.
And they need to pay 5% customs. If they have the business in free zone, they have their warehouse in free zone, they don't need to pay it. Because the concept of free zone is there in UAE before the taxes comes.
Okay.
It's actually duty-free zone. So there is no customs duty. Now when it comes to the taxes, VAT, all these things, it became a kind of tax-free also to an extent. But the idea of free zone is, it is duty-free zone.
Okay. Okay.
That need to take into consideration. The fifth thing I'll say, like, if you are setting up a company, a trading company or distribution company in UAE, are you going to bring the goods to UAE? I'll give an example to you. Maybe let's say you're importing goods from one African country, Zambia. okay, you are going to a service provider and asking like you want to bring goods from Zambia and sell into the local market.
Okay.
Let's say the service provider is giving you offer, you set it up in Ras Al Khaimah, it is cheaper, fair enough. You need to check whether the ships are coming to Ras Al Khaimah.
Okay.
Or else what will happen? Your shipment will come to Dubai, Jebel Ali port, which is one of the world's largest port. And there will be a feeder ship from Dubai to Ras Al Khaimah.
Okay.
It will come to your warehouse. Where is your customer located? In Dubai. Then by road you need to again bring the goods back to
Dubai.
So always see like if you are into trading, how your logistics are happening, which is very important. Sometimes I'll give a hypothetical example. Ras Al Khaimah may be charging 10,000 dirham for a license, but
Okay.
Dubai is charging 30,000. Primarily when you see, you'll feel like it's 3 times more. But if you see the indirect loss what you are going to have, it is very difficult. One more very important thing, which many people are missing. See, the VAT is a federal law. Corporate tax is a federal law. Customs is not federal. Customs
Okay.
is for emirate. So it's
Okay.
Dubai customs, Sharjah customs,
Okay.
Ras Al Khaimah customs. If you are a Sharjah company, be it free zone or mainland, you are bringing your goods to Dubai port. And you are clearing the goods from Dubai and taking to Sharjah. Dubai customs will consider that the goods are taken to mainland. So
Okay.
you cannot tell that, oh yeah, my company is in Sharjah free zone. Okay, then use Sharjah port.
Okay.
If you use Dubai port, this is very crucial because
Yes.
sometimes you may be making little profit on using a different port, but you are end up paying 5% customs duty unnecessarily, the import duty. So there are multiple things. I cannot stop it with 5 if I keep talking.
These are all the hidden things that the trader should be remind.
So
Yes.
what we do when we get as a group of company Flyingcolour, we are of course 22 year plus in the market, and we just don't set up the company. We have our business setup thing, business like where we set it up in mainland, free zone, offshore, then all related PRO services, be it visa, golden visa, bank account, trademark, all these things we are providing. This is there with most of the service provider. You go, they will set up your company. How we process always, anyone who want to set up a company through us, we make sure that our tax advisor is also involved from day one.
Okay.
Why it is like that? It's an overhead for us. But what we want to make sure that our clients will never go wrong after they set up. The tax advisor will sit in the meeting, understand first what is client's plan, then tell that sir, let's do like this, because if you set up here, maybe XYZ problems can come. So that guidance really matter from day one. Imagine after setting up, after 3 years, you're understanding that your setup was wrong. How much you cannot go back and do something
It will be
which you already done.
Disaster.
Disaster it can
Yes.
be. So some activities free zone is giving 3 free activity. Okay, let me take them 3 free activity. Do you really need this activity? Maybe this activity will stop your bank because that activity is high risk. Something is free, that doesn't mean it is always good for you. Always need to make sure that when you get something free.
Yes.
I don't believe in free buys, by the way. So this is what we do when it comes to any clients who want to set up a business. Of course, we don't stop we maintain their books, we take care of their taxation. We are just not a tax consultant. We are a registered tax agency registered with Federal Tax Authority.
Yes.
I myself take care of the corporate tax and VAT part and excise tax part. We have better tax agents as well on board, including Arabic speakers who can any kind of language barrier, including Arabic speakers. We have the tax agents on board. We are a Ministry of Economy approved audit firm, so we can take care of the audit part as well. And we have a dedicated company to take care of the compliance part. this is again one crucial thing. Maybe
Yes.
we can talk about the compliance in a different podcast. Otherwise, it will be like a web series. So, compliance, there is anti-money laundering compliance, which is applicable to certain businesses. They have to take care. Now, such businesses require to have the money laundering reporting officer in house. They need to do a lot of paperwork, like these things. So we have a dedicated team with qualified compliance officers to provide that service. And we are into the real estate, like any investors who want to set up the or buy the property, sell the property, make such investment. We guide them. We just not sell the property. We guide them from where they can get the maximum ROI, which area is fast developing, which is the upcoming development area, like where it is going to happen. We guide that way. And yeah, we are into the immigration, second citizenship as well. I call it second citizenship. Primarily focusing in Caribbean island country, where against investment, the second citizenship program, which for some people they look for. There are multiple reasons for second citizenship, but generally what I have seen is those countries whose passport is bit weak and they are not able to travel to many countries like US, Europe. They look for a second citizenship. So we provide that service as well. And we are in DIFC, which is Dubai International Financial Center. Through DIFC firm, we primarily focus on structuring business. So it's a combination actually. It's not just we set up in DIFC. It's a combination of taxation, international taxation, like the double tax agreements review, all these things. Primarily what we focus through our DIFC is like holding structures, SPV, special purpose vehicle, and foundation, family foundation or foundations. This is primarily for the asset protection. Asset protection, again, we have done a detailed podcast on
Yes.
foundation as well.
Yes.
We'll put that link also in the description. And when it comes to asset protection, it is very important to know that UAE is having the civil law within UAE. And the jurisdiction like DIFC is following common law, which is English law. A client can, when they are moving to Dubai or when they are moving their assets to Dubai, they need to take a call like how they want to deal their succession, the asset protection, all these things. So we structure their wealth actually. I'll not call it business, their wealth through our DIFC firm. So this is a portfolio of what we are handling, and it's a
Simply from setting up to managing and maintaining the compliance, everything Flyingcolour is taking care of with the best quality. Yes, of course. Then
actually we want to give that 360 degrees service.
yes.
It's not that everything we are doing in-house. If you ask me, are you a law firm? No.
No.
Of course, no. But we have our affiliate law firms where we help connect our clients. So we don't want to say something no to client. If a client want a website designer, we have our partner who will connect with them. So that's how we want to serve the client in Flyingcolour. I mean, that's the legacy we have built in our organization, that whatever the client's requirement, as long as it is legitimate and legal, we'll try our level best to cater.
So let's talk about like the international trading also. Like the company who's in, like for example, they have a main office in America, okay, and their employees coming and closing the deal in UAE, and will that raise any tax liability over here?
It's a very subjective question. I think the question is coming from the permanent establishment aspect. If I'm not wrong,
Yes, sir.
See, that is a foreign company can also come into the tax purview in certain situations, and that is very subjective. The thing is that if there is a company, as you told in US, their employees are coming here just for a client meeting and going back to US and closing the deal from US. UAE has nothing to do with that.
Yes.
But the US companies' employees are staying in UAE. They are in UAE, like closing all the deals. Then what is happening? It's called PE, which is permanent establishment. A foreign company has a permanent establishment in UAE. UAE will tax on the income which is generated through this PE. not the whole income.
Okay.
Oh, as you told, that person came here, stayed here, and that person closed a deal. That deal, whatever the attribution in UAE, that portion UAE will tax. And the non-resident should register in that case and get the tax number and do the filing as well. So it's a very subjective case when it comes to permanent establishment.
What are the things that even when the business is going to close? So you said like no five compliance that we have to keep in mind for who's setting up the business. What about closing the business? What are the main things they have to do? Because when people shutting down their business, they have to close other things also, like deregistering of VAT, deregistering of CT. This also have to be done. So what are the things that the people are missing while closing down the business and moving out from UAE?
First of all, personally, I don't like to talk about closing someone's business. But yeah, it is also important. It is also important because entry is very easy. Anything you see, entry is very easy, but you need to have equally know how is your exit plan. I'll say like, okay, first of all, like, being a trading business or a distribution business, you need to go for a liquidation. You need to appoint an official liquidator. And whatever the things you have, you may be having import-export code. So cancel the import-export code, close the bank account, cancel the visas in the company, settle all the employees and cancel all the visas. And then bank account closure, which I already told. And if you have VAT account registration, get it deregistered. You have excise tax account, apply for cancelling the excise tax number. After all these things, the appointed liquidator, you submit all the documents, and liquidator will give you the certificate of liquidation. Now, certain zones are asking a newspaper advertisement as well, that you need to put an advertisement in not all the zones, obviously. Newspaper advertisement is mandatory, so that newspaper advertisement need to be taken care. And once everything is done, everything is closed, all this thing, all the documentation, including the liquidator certificate, everything need to be submitted to the authority.
Okay.
So the authority can be depend on where you have set up. If your company set up in mainland, then the authority will be Dubai Economy and Tourism Department, which is coming under Ministry of Economy. If the company is in free zone, each free zone has their authority. For example, DMCC free zone has its authority, JAVSA authority is there. Depends on which free zone you have your company. All the free zones are coming regulated by Ministry of Economy, like mainland, but each free zone have their own authority. Submit all the documentation and get the liquidation document, which is called like the cancellation document, license cancellation document. Post this, one important thing, corporate tax deregistration.
Yes.
Because corporate tax deregistration we can do only after getting the final liquidation certificate. We need to wait for that, and once the liquidation certificate is received, within 3 months the corporate tax deregistration required to be applied.
Okay.
And anyone who miss monthly, 1,000 dirham is the penalty for it. Sometimes again it is like oh, now my company is closed. So the assumption is that everything is closed now. The deregistration of corporate tax will start only after closing the company, liquidating the company. So that also need to be taken care of.
Thank you for watching this podcast. I know it's a lot. Setting up a business in UAE may make you or it's a break you. Make sure and subscribe our channel to get updates for the future podcasts. Thank you so much.